So with that basics, and I know that's very basic for a lot of you on the call, but number one, I wanted you to select a business purpose and really determine whether what you're creating is a holding company or whether it's an operating company. Once that's really clear in your mind, then we can go to selecting the proper legal structure. Here are your options that you will have as in creating a business. There's a sole proprietorship, there's a general partnership, limited partnerships, LLCs or limited liability companies and corporations. And I'm going to break these down individually. But before I do, remember the first thing I wanted you to do is to select the business purpose. Now we know whether it's an operating business, let me give you some basic information. If it's an operating business, you have three options. You can be a sole proprietorship, an LLC, or a corporation. But I would never, ever, ever run a business out of, let's say, my IRA. I wouldn't want to do that. I wouldn't want to run a business out of a limited partnership. Here are your three best options. And I put sole proprietorship in parentheses, kind of going, that's not our best option, but every once in a while it might work. But really, LLCs and corporations are the way to run an operating business. A holding company is very different. This is when I would hold assets, let's say a brokerage account or real estate. I would hold those in limited partnerships, in LLCs, and sometimes in retirement vehicles like a self-directed IRA, self-directed 401k. Those are good holding companies because they protect the assets better. The operating company, we really want tax perks. We want to put our name out. We want to operate that, but to own the business, I want something with good charging order protection. We'll get into that a little bit later, okay? Operating companies, we want something with good corporate veil protection. If something happens, you as the officer, director, or shareholder shielded. But with a holding company, I really want something that has good charging order protection. If I personally get sued, they can't come take the asset away from me. All right, we'll get into that a little bit. Here we go. Let's talk about each one of those five entities all by themselves. A sole proprietorship is simple to form, as all you need is the intent to make a profit, and you are, by law, you are a sole proprietorship. I don't have to file this with any state agency. I don't have to let the IRS know. I simply start a business, and I have the intent to make a profit. And there's no liability protection because I really am the business. In the eyes of the court, there is no corporate veil for me. I can't hide behind that and say, well, that was the business. No, you are the business. What you're saying to the courts when you set up a sole proprietorship is make me liable for everything that happens in that business. What you're saying to the IRS is give me the least number of tax deductions available to man. And so as running a serious business, it's probably not a great idea. However, there are times when a sole proprietorship is exactly what a person needs. I see that when, a husband has so many ideas. And what if we do this and we could do this? Or a wife goes, oh my gosh, or a woman, or somebody comes and I've got so many ideas. What if I just try the idea, get it up and get it running, start a business? You don't even need a separate bank account. Try your idea, see if it has merit. But my son, for instance, is a triple black belt in Taekwondo. He wants to break off on his own. And so should I be an LLC? Why don't you just go out and put out some flyers and see if you can get some new clients and try that. And then if you're successful at that, then let's set up the LLC and let's get serious about business. But a sole proprietorship is a good testing ground. It's also good for home-based businesses when there's no employees, when there's no outside partners, and when there's little to no liability. However, once you have employees, once you get making money, And this is a serious business. A sole proprietorship is not the place where most of you want to be, because again, increased liability and a lot less tax deductions. And maybe I'll add one other negative, and this is, of all the business structures you could have, this will be the highest audit rate of any business, to the extent sometimes of 10 to 15% of sole proprietorships are going to get audited, where the others might be far less than 1%. It's a big difference. Okay, there's a thing called a general partnership. Now, again, this is simple to form. This is a handshake deal between you and somebody else. And you go into business, and I don't have to file any state forms. There's no tax returns. But what you're saying is, not only make me liable for everything that happens in the business, I want to be responsible for all of his mistakes and her mistakes as well. This is a general partnership. There doesn't have to be a written agreement. Maybe there is. What also means is that there's joint and several liability, which means if partner screws up, I can be held 100% liable, even though I didn't know he went out and took a $50,000 loan against the business. That's okay. You're liable because you're a partner. Any liabilities that he creates, you can be responsible for. So what would this be appropriate for? I've thought about this a lot, and in 22 years of running a hotline, I've never suggested a general partnership to anyone. So when would it be appropriate? And the only time that I've ever been able to think that a general partnership would be like a little lemonade stand for your kids. They get together. Any serious business, I would never recommend a general partnership. I think it's too risky. And so with that, but it is an option. And I just don't think it's a good option. I think it's like an F-rated asset protection tool. All right, so I crossed that through. And corporations. Corporations are the traditional way that we've done business in America. This is how, if you're serious about business, we set up a corporation. It has corporate veil protection, which means that if something happens in this corporation and you're running it correctly, you're keeping a separate set of books and a separate bank account, and you're doing your meetings and minutes and resolutions, and you're running it right. You're not commingling funds. Then there's a corporate veil, which means if something, any liability that happens, debts, obligations inside of the corporation don't affect the officers, directors, or shareholders. That's a good thing. We like that. But with a corporation, there are formalities. You should have an annual shareholders meeting, an annual board of directors meeting. Even if it's a one-person corporation, you're expected to hold these meetings and keep minutes at them. A corporation has rights as a person, which means it can sue people. It can be sued. The corporation can own property. It can defend itself in court. It can stand up, and it has legal rights as a person. It also has perpetual existence. Even if you, the owner, dies, the corporation can continue on for generations at a time. There's more tax deductions in a corporation than there are in any other type of form of ownership. So this is the traditional way that business has been run. The fourth way to run a business is as a limited partnership. This has been the traditional way that we own assets, not run a business, but we own the assets. Traditionally, if we've held real estate, we would hold that in a limited partnership, maybe lease that or let the corporation manage it. Limited partnerships have what's called charging order protection. Let's say there's 5 of us, we get together, we all invest money. If one of the partners gets sued, a judgment creditor can't come in and take the assets out because there's innocent parties. The only thing that the judgment creditor would be allowed in most states is they could put a charging order or a lien against that member's interest in the LLC or the partnership. So the nice thing about that is they can't come in most cases and take your interest away or take the assets out. You're limited in the liability. If you're a limited partner, the third bullet, if you're a limited partner, I have no liability other than I could lose the assets I invested. But if something happens in there, general partner is at risk, but not me. Passive income, if this is being run right, this limited partnership, all the income that comes to me would be passive by nature. We'll use that. We love limited partnerships and things taxed as partnerships because of the flow through taxation that they have. Depreciation deductions and losses and there's so many advantages to owning real estate on the tax side. We like things, we like limited partnerships for that. So the pass-through benefits. Limited partnerships traditionally don't have the same requirements for corporate formalities, so ease of operation. I don't have to do the minutes and meetings and resolutions, stock certificates, stock ledgers with the state, corporate seals, all of the corporate formality nonsense that small businesses don't traditionally do anyway. And finally, limited partnerships give us the ability to spread income to lower tax brackets. Let's say it's a family-owned limited partnership. We own 10 pieces of real estate, and I'm gifting slowly my interests to my kids. Eventually, it's paying for their college. Eventually, it's paying them, but it allows us to shift income to lower tax brackets and spread the income out. So that's a limited partnership. Now, this one is recognized by a state. It has to be filed. There is a tax return with a limited partnership. It's recognized, and it can have really good partnership agreements where, they're incredible asset protection that come through a limited partnership. Again, this is recognized by the state, recognized by the federal government. You're now graduating. This is not a general partnership. This is a limited partnership, much, much stronger. And then the last way to run a business would be a LLC. This combines all the major benefits of a corporation with a limited partnership. It's taking the best of both worlds. From the limited partnership side, it brings charging order protection. From the corporation side, it brings corporate veil protection. So if something happens, I can't sue the officers and directors. If the lawsuit comes to them, we can't take their interest away. That's good. So we like that. We like the limited liability to the members. We like the ease of operation. We like the pass-through that a lot of times corporations or LLCs can have. We like the tax flexibility of an LLC. So once you decide your business purpose, now we decide which one of these 5 ways do you want to set up a business. Is it going to be a holding company, or is it an operating company? And then most businesses today, most operating companies are set up as LLCs, taxed as corporations, and most holding companies are set up as LLCs, taxed as partnerships.